over 8 years of professional experience. Currently heading the Shreyas Global branch in Coimbatore. He possesses extensive expertise in business succession planning, business valuation, due diligence, and export-import consultancy. He is a regular speaker at the Coimbatore branch of SIRC of the Institute of Chartered Accountant of India, a regular faculty member for CA classes, and a visiting faculty at Stella Maris College, Chennai. So we welcome you, Dhinesh Rajaa ji. So over to you, Dhinesh Rajaa ji.
Thank you, Ram. Thank you for the kind introduction. So, good evening, everyone. Am I audible? So, I'm just looking to share my screen. Let me know if my screen is visible. Am I audible?
Yes, you are audible and your screen is visible, Dinesh ji. You can start, please. You may proceed.
All right. So, hi, everyone. So, thank you. I'm so happy and delightful for having this session on family business succession. So, this is the next session in Shreyas Thoughts Web Series. Okay. Can you put in the chat box how many of you know about family business succession? Can I see the chat box? So you can put yes or no. So how many of you are familiar with the concept family business succession so that I can plan my session accordingly? Right. Okay. Right. All right. So I'm getting a bit of mixed replies of both. So let me give you some practical insights for Indian family businesses. So in this session, you will learn what is succession planning, family succession planning, why it is crucial for family business, and when you should start planning, and how you should structure and execute a succession plan. So before beginning this session, I would give you some statistics. You must understand 80%, 85% of the Indian business are family owned, and they contribute over 79% of India's GDP. And the 47% of the family business have next generation people, but only 24% has a formal succession plan. So there is another statistics which is saying that only 10% of a family business makes it to the third generation, and less than 3% makes it to the fourth generation. So there is wider gap. So why such a fail happens? It is not because they don't have any strategy. It is because they fail to make a succession plan. So that is the reason major of the family business fails. So in this webinar, I would like to share with you some case studies and also some practical ideas how we can ensure that a family succession planning is put in place. So this is a typical case study. I saw a lot of no in the answer book, I mean in the chat box. So let me take you through a small case study, which is a Goel one. So Mr. Goel, in 1980s, he started his textile business with just one power loom and a rented warehouse. So that business grew to tremendously. He was a very charismatic leader, and he looked after his employees well. He had a very good connect. He was a very family-oriented person. Everything was fine. In the year 2020, the gross turnover of that company is 500 crores. But unfortunately, in 2021, he had a cardiac arrest, and he didn't have any succession plan in place. So he had two sons, Ravi and Amit. So Ravi, he was involved in business along with his father Goel for almost 10 years. But Amit, he was in Canada. He moved after his master's or a degree. He moved to Canada. So after in the first board meeting after the father's death, Amit came. So I mean to the board. So what happened is Amit straight away asked for. He asked like, I need to have my I would like to have my share of assets from the business. That is, he just wanted to exit from the business, taking away the 50 percentage. So this came as a shock for the CFO, the vendors, and for the family and the employees around it. So because if a family-oriented business, which was run so successfully, if some outsiders comes in, there will be a clash of decision-making things, and there will be cultural changes, and there might be strategic changes and everything, and the the flow will be affected. And this ended up in a tussle between the brothers. So uh, what happened is, I mean, there was kind of war between the brothers. But one well-wisher of the family, he advised them to have family counseling or a family business counselor. So they went on, and that became a turning point. There was a resolution that was put in place, which said like Ravi will buy out shares from Amit over a period of 6 years. He will pay annually for what Amit owns from his business. During this period, a professional CEO was hired. He ran the business, and finally, after Ravi took over, I mean, once Ravi is going to take over the business 100 percentage, he will be heading the business. So this is how it has happened. So finally, Ravi himself did a family constitution drafted. So this will look like a full kind of story. When you get in the shoes of a family business, you will be able to clearly see what has happened. So a owner, he didn't have any business succession plan in place. So between just two cousins, I mean two siblings, a problem came up. So let me take to another case study involving four cousins. So what we saw in previously is just one generation. I mean, the second generation, they had a tussle, but now we are going to see what happened between when the third generation comes in. So this was a case study of a wheat trading company. Say, uh, Aro's grandfather, he was the founder of a wheat trading company, and he had two sons, Mr. Mahesh and Ramesh, and they were just, they helped his father to develop the business, and they grow in different verticals. Say they did a food processing unit, they had an export business, and they entered into other business as well, tech business as well. So when the third generation people, this you can see in this image, Arav, Karan, Divya, and Pratik, they came in, things were different. So Arav was handling exports, Karan was handling tech, Divya was handling HR. They had their own ambitions in their business. Whereas Pratik, he didn't have any ambitions about the business. He was very happy with what he was doing. He was very happy with his personal things. So the business was going very smoothly, but a problem came when RO wanted to enter, do a different business. So over the dinner table, he asked for 5 crores of money as seed fund for his another company. So the problem came between the cousins. There were challenges. So when there is no business succession thing or any constitution or any vision that is not in place, these kind of things will come. So again, somebody from the third party, they have to come in and they have to advise them in a way the problem is solved and solution is done. So we'll be seeing in later parts what is the solution that probable solutions that we can get. Like there is another case study which we will see later. Yeah. First, we will see what is a business succession plan. So, business succession plan means nothing. It's a transfer of ownership, leadership, and the management responsibilities from one generation to the another, ensuring the transition is smooth. That is the daily activities of the business. It is easily passed on to the next generation. So, whether it is going to happen overnight or in a couple of months, whether it can happen, definitely it cannot happen overnight. It involves a lot of process. It needs some time. So let's understand what are the common myths that is under the business succession plan. So it happens once your children or your the next generation is ready, the business section happens automatically. This is a very common myth that the people have. So it's not that, because they are individuals, they have their own perspectives, their own ideas about how to run the business and kind of things. So that is going to be a different thing. And the next thing is that only big business needs a succession plan. So, somebody in the chat box, they put Reliance, Adani, and Lodha, whomever it is, such business plans I have seen. So, there is a common misconception that only big businesses need a succession plan and a small business or a medium-sized business doesn't need a business plan. So that is some common myths that we have to see. And a will is enough to transfer the business. A common thing is we have seen in a lot of movies that we will see one person, one big industrialist, he will die, he will have a will, so and so things will happen. So it's a common myth. In real life scenario, that is not the ideal way to handle business succession. So what is happening here? So a business without a succession often faces leadership gaps. So once a proper successor is not identified, if they are not identified, there will be definitely going to gap in the business between the stakeholders, between the management, between the employees. It is going to happen. And we are talking about the real family business here. Of course, if the business is not doing well, there is going to be a bad situation in the family as well, because without clarity, definitely family disputes will arise. So once a structured transition is there will be a long-term business survival. So for example, take Reliance Group and Tata Group. Reliance Industries in the year 2002, it has the worst phase, I would say. As you know, once Dhirubhai Ambani he passed away, there was a fight between the two brothers, and mother, she has to come in and solve the issues and split the company and give between the two brothers. And what happened after that, everybody knows. One has come up well, is the richest man, and the other one is not doing that well. So that is one example. Both were involved in the management, of course, but they didn't have any business succession plan, so they failed miserably. But now, if you say see how Anil Ambani is planning is this thing, it's totally different, which we will touch later. So, for example, that was an example where a business succession plan was not there, and that was a bad scenario. Take Tata Group; they have a very planned transition. It's a very smooth transition one. If and they have a clear segregation between the ownership, the management, and a family. So they have the clear segregation between them. So there will be a planned transition from one management to the other, and the vision of the company will live on. So why succession planning matters? Because we need to continue the business. We need to there should not be any operational disturbances, and our wealth, it should keep on increasing, and in multifolds it should not come down. And since we are talking about a family business here, there should be harmony between the family. Only when business is going well, money comes in, and people will be at a good relationship between each other. Example, you can take Murugappa Group. In Murugappa Group, they have proper succession planning, that their generation of the next generation, once they are ready, they will get into the management. They will take roles. They will be involved in decision making. So they will go out. They will ensure that they have the enough experience. They will go to other companies. They will learn. So these kind of things will happen when there is a proper succession planning thing. So without a plan, of course, there is going to be leadership struggles. Who will take the table? Who's going to taking the head table? That kind of struggle will happen. Once that the next stage of it is legal battles, and obviously the business is going to fail. You can take examples of Lodha brothers. Of course, I'm not talking about the business failure here. I'm talking about the tussle or legal battle between the ownerships. There is a fight between both the brothers in Lodha brothers case. You take example of Kalyani brothers from Bharat Forge group. There are problems between them, and Anil Ambani I have mentioned here. You must note that Anil and Mukesh had a fight. Ambani means Anil and Mukesh had a fight in 2002. But now what is happening here? So Anand Ambani has just become the executive director in Reliance Industries board for the next 5 years. So learning from the bad thing, bad experience, Anil has planned in such a way. He has a good succession planning in such a way that all the three of his children are taking part in the business. So the key takeaway in this is a planned transition will ensure the family business will thrive for generations. Okay, we saw what is a family section planning, and why we should plan for a business section, and now we are going to see when you should plan. So the best time to plan is at least 5 to 10 years before the current leadership comes up. you can always resonate with Ambani group for this or Tata group for this at this point of time, how they have planned how they are identifying the next leaders and how they are planning the transitions. So if you are running a business, say a small or a medium business, and if you are going to, if you have identified the next generation, say you are in your 40s or 50s, and you have next generation coming up, before expanding, you should think about how we want to plan this. So you should try to train your next generation and make them feel comfortable with your business. So as soon as the next generation shows interest in the business, you should start planning your business section. So that is the thing. Here I have given you some examples. The Ambani family dispute. Since Dhirubhai Ambani, he didn't have any plan. In 2002, it was very publicly seen that they had a tussle and legal battles, and the operations were halt. Those kind of things will happen. So the earlier you start, the smoother will be the transition. So I have given you two other things here, reference for SS and Arnachalam. So this is a kind of little off note. I'm referring to the movie here. In Santosh Subramaniam, if you would have seen, Prakash Raj would have been involving Jayam Ravi and his brother in the business. So they are getting trained in the business, and at the later point of time, they will be either taking over the business or they will be having a separate vertical of the business. And the other thing is a classic example. Of course, you can that is through a will. That in that particular movie, Arnachalam, the father Rajni will be given a younger Rajni some tasks to complete to see whether he is ready to take over the next business. So this is kind of identifying the leadership or in the from the next generation. So any any doubts so far? Anything you wanted to add? Yes, I see comments from here like Murugappa has good structure. Yes, very true. And TVS has also resolved now. Yes, right. Okay, so I will just move to the next part of the thing. So now we have, I think now we have a good idea about what a family business section plan is, how a problem comes between a small business or on a family-owned business, and what is a family section plan, why it is important, and when to plan.
Dinesh,
Yes.
I have one question. Like practically, at what stage or time the business are doing like succession planning?
Can you come again? I didn't get you properly.
You have mentioned 5 to 10 years before the new
Yes.
generation enter into the business, right?
No, 5 to 10 years before a current leadership wants to retire. Say, if I want to
Okay,
retire in the next 10 years, I need to get
okay,
involving the next generation of leaders right now.
okay, right.
Yes. Yeah. Right. So, how to plan this? So, there are 5 critical steps to do this. One is identify and develop a successor. The second thing is having differentiating between ownership and management. We should have a clear idea that both are not the same. The third thing is having a good legal and tax planning in place. And the next thing is we need to have a good governance tool like a family constitution or advisory board. And the fifth thing is having a good transition strategy, like a gradual handover and an emergency plan if that handover is not going well. So we will see step by step how this is happening. This is the first thing. So one of the biggest mistakes family business owners make is assuming that their children will automatically take over. So this is a very common misconception among the family that they will be born ready. Once they are done with their schooling or a college, they will be ready to take over my business and they will do as I do. So this is very common mistake that any leaders does. So how to identify the right successor? So practically, we need to get them into the business as early as possible. We need to identify their passion and we need to work on their commitment. So how you will see whether they will be ready? We need to groom them. We need to get say if somebody running a textile business and their children, as soon as they are done with their schooling, they should ensure that they are doing part-time internships in their business. So they learn the nuances of the business. What is it? What it is all about, and how it operates, how a financial cycle operates, a financial year operates. Those kind of things we need to give exposure to them. So at that point of time, we'll be able to see the passion and commitment of them towards the business. Because in the family business, in most of the cases, it will be only one individual who will be start having an idea about a business, starting the business, giving his time, his sweat, blood, everything, and making a business so successful. Later, a sibling of his or any other parents, they can help their business and join the business. But when it comes to the second generation, they may not have that much of passion about the business. So it is important for any entrepreneur, when identifying the next generation, when identifying the right successor, to see that they have the same passion and commitment, and they need to have good leadership skills, and they have to be trained in the business operations. More importantly, as this is a family business, they should be accepted by all the family members. Take our case number two. There were four cousins. If Karan is going to take over the business and the other, the cousins, they are going to remain as ordinary parties to the business. They won't take the part in the management, or they will just take any other vertical positions, and Karan will be the chairman. Then Karan should be accepted among the family members, employees, stakeholders. Then only he will gain that respect in the business, and he can run the company successfully. So it is important that these four things should be present, right? We have another example here. I have given an example of Ratan Tata and the Tata Group. So it's not necessary that the successor should be within the family. They can be outside the family as well. But the important thing is that the vision of the family, it should be held. It should be held up. So that is what it is highlighted. So once Mystery Eden, they have challenges in 2012. Later, Chandrasekharan, he came as an external professional who was appointed. So the best successor may be sometimes not a family member, and any family should be open to it, because ultimately what is important is the business should run. So how to prepare a successor? Yes, you can mentor them, you can train them, involve them as early as possible in your business. The second thing is gradual leadership transition. Give them small responsibilities, see how they are performing, give them frequent feedbacks, involve them in key discussions. Then they will get on, they will be getting ready. And the relevant education and exposure is very important. As we saw in the Murugappa group example, they will get involved, they will have the formal education. They have a thing like anybody involving in the management should have minimum qualification. So anybody who is ready to take the next the baton is, they should be formally have that business education, and they should be ready to with all the industry insights, right? Now step 2, this is like structuring the ownership and the management. First, I would like to touch upon this circle, the three circles. It look like a typical Venn diagram. So here you could see one circle, it is the family. The next one is the ownership, and the third one is management. You could see uh, there might be different parties to the family who may not be the owners. For example, in a family of four cousins who are there are girls in that cousin. The cousin thing. The son-in-law may not be. He may be the family, but he may not have the direct ownership in the business. So there is a difference between the family and ownership itself. We have to understand that. The third thing is that the management. So the one who is in the family can be a owner and can be involved in the management. So like that, we can have different scenarios here. And when we talk about the management here, there might be persons, professionals outside the family who will be involved in the management. And when we talk about ownership here, when the company goes public, of course, if you ask me if when the company goes public, of course, the major stake is going to be remaining with the family in some type of constitution, but there will be outside shareholders as well. Yeah, thank you. So there will be so we need to understand that the distinction between a family, a ownership is somebody who holds the equity or shares. They are entitled to have the dividends or the profit. They may not be directly involved in the day-to-day operations of the management, but they will direct the company, how the company should be operating. So those kind of things the ownership team will take care. Whereas the management, they run the day-to-day operation of the business. They make the business decisions, and they can be either family members or non-family members. So a good business succession planning needs to structure this very properly. Why separation matters? Why all the family members cannot be involved in the business? Because there is going to be a conflict. As we saw in the first things, we need to identify the right successor. When a person who is not that much qualified get into the management or the board to run the business, definitely there is going to be internal conflict. When it comes to delivering and the competencies, there is going to be internal conflict. So when we have a distinct separation between the ownership and the management, we avoid this internal conflict, we avoid the power struggles, and somebody they might be genuinely doesn't want to enter into this management kind of thing, and they just want to have their own lifestyle and their own ambitions about the life. So they will be very happy if they are not part of the management. So there should be a different a definite distinction between ownership and the management. So it will definitely protect the business performance in the family company. So this is a very important thing which is here now. If we have everything in place, we have identified as right successor. We have distinct, different, genuinely, we have a clear vision on board. Now we have proper management, proper ownership structure, everything is fine. But again, if the person who is participating in the management is not doing well, definitely there is going to be a problem. So how to solve this problem? We need to have a family constitution in place. As we have a constitution for India and we all abide by that constitution, as we have all followed that constitution, a family must have a constitution. A family who has a good business and wants to have a very good legacy needs to have a family constitution in place. It should be like a holy book for the family. They should have a proper vision. They should have a proper family roles. How a person can enter into that family and how they can exit. When we talk about entry, we need to talk about exit also, because we have seen it across the media how a lot of separations is happening. So there should be a proper and entry and exit strategy. And if if an issue comes, what are the voting rights of any family member, and how they can resolve their disputes, whether it is through mediation or any other means. They need to have everything in this family constitution. So the family constitution is an extensive document. It cannot be prepared overnight. We need to spend a lot of time. We should sit with the leader of the family. We need to understand his vision, his idea about the family business, and we need to draft the constitution. We need to sit along with the other family members. We need to make them understand this is what it looks like and it's going to be. So we need to involve all the family members, and we need to finally sign off a family constitution. It's not something which comes from outside. It is something which is created by the family for the family itself. So that will help. If any problem comes, we should definitely go to the family constitution and see how we can resolve that. So that is the first thing to do. The second thing is having an advisory board. When there is a conflict in a decision making, we may go take an expert opinion, a third party opinion. So that will help, in clash of the decision making. So when the family members are very matured enough that when it comes to decision making, a lot of times ego kicks in. So when we see that, when there is such kind of scenarios, if we are leaving out to the experts, then it will be helpful. We avoid dispute at that point of time. And the third one is having a good legal documentation, clearly defining the roles and responsibilities, who will own what and who will manage what. So those kind of legal documentation will definitely help. So some kind of what are the so the few examples here are about the Murugappa group. So the family members must meet some eligibility criteria before joining the business. We talked about that, and they have a good governance structure that ensures the ownership and management they remains distinct. So as Tata and Godrej Group. So they all have in these kind of things, the proper succession planning, and they have a clear distinction between the ownership and the management. That's why they are very successful. That's why we don't see any kind of disputes, or we see them so successful and flourishing. So before moving into the next thing, any thoughts here, or I can ask you a question. What is common between Reliance, Tata, and a common businessman? Anybody? What they have in common? Since the video of everybody turned off, you can put in the chat box. Yes, a passion of doing business. You're very right, ma'am. They are family-owned business. Yes, very right. And the most important, okay, I will ask you this question. What is the common problem or thing they have? They need to identify a proper successor. This is a common thing between all the three. Any common businessman, they need to have their business successful. If they need to run it forever, they need to see it growing multifolds and leave a legacy to this world. So having a right business action plan will help them. That's it. And it's not that hard in a paper. It's very easy. We have only 5 simple steps. But when it comes to action, definitely it is going to test our passions, but it is definitely worth it. So far we have seen two things. One, identifying a proper successor, and the second thing is structuring ownership and management. Now we will see the next thing, the legal and financial planning. So if you see, many business struggle because they don't have a proper inheritance plan and other things in place. So when some time ago, when Cafe Coffee Day, the founder, sudden due to that sudden bad incident, he left and his family has to take his shoes. And if you could see, there was no written will or strategy, anything. All of a sudden, out of nowhere, the wife has to take over the business. When such things happens, it is a double-edged sword. It might, it may do well or it may not do well. It will be left to the course of time. So a good business should have a sound legal and financial planning. When there is no proper legal planning, there is going to be dispute, litigation, tax loss, business disruption. That's why we are here. We as chartered accountants, financial professionals, working professionals, we are advising our businesses on that to have a proper business structure, to how to get leave your wealth to the next generation. So what are some of the essential legal documents which could help us to plan very legally? One, the basic thing is will, but it may not be ideal for every situation, because it has very a limited acceptance, and it is in itself is not enough to cover the entire business structure. The second thing is the family trust, which is very popular among the family owned businesses. It helps to take collective ownership, and it protects the interest of the family, or interest of the family business, or the assets of the family business. Most of the Tata shares, up to 74%, it is owned by 60% is owned by family trust only. And for to some extent, we can depend on power of attorney and shareholders agreement. See, the power of attorney, it will ensure that if in absence of, say, in absence of a father, somebody, a son or a third party who is ready in the next line, they can do the business. When talking about shareholders agreement, this is also a way which is seen to protect the interest of the business. So how we will restrict the transfer of shares. So when entering into a shareholder agreement, and the shareholder will be bound by that agreement, and he may not transfer the shares to a third party. So likewise, we can get into this legal and financial planning depending upon the case. Some of the tax planning strategies like gift and inheritance. So when we gift within the family, when they are relatives, it is going to be exempted. So we can see whether some part of the business can be done that way. And we can form a private trust and put all our family assets in that particular trust, so that we see that our business, I mean, other assets are protected. So I would like to discuss a case study here. When I tell about case study, um, it is a Coimbatore based real estate kind of case study. There was a father who had a lot of land. He had a lot of commercial properties. He had two sons and a daughter. The two sons were in India. They were taking care after the, whatever the commercial properties. They maintained the assets. They take care of they took care after paying the taxes, the legal thing, around that assets and other things. They were maintaining that. Uh, they had a proper tenant and collecting the rent and enjoying. So one fine day, it was the 60th birthday of their mother. The daughter came from US. She was working as a software engineer there. She came here, and just as a, in family thing, everything begins with a small casual conversation, but the emotions are big, so it might become very hard. What happened is, she told like her to mother, you have every assets in your name only, nothing is in mine. I feel like an outsider. So one of the brother told like, you are not even here. We are managing the everything here, and you are not even here. So this became a very clash, and finally they had to settle down through a third party. So what happened is, after that they took inventory of all the assets that were belonging to that family, all the ancestral properties that were belonging to the family. So they like bifurcated between between commercial properties and ancestral properties. So the commercial properties, what they did is, they formed an LLP where all the three, I mean, siblings, they are a party to it. They will enjoy the income from that commercial properties. The both the brothers will be appointed, were appointed as the management, in the management. So they will be taking salaries for that whatever they're managing, because they were also feeling that they were not properly appreciated for staying in India and taking care of all the assets. So that is one thing that, and the ancestral property, they were put in the private trust. It was made and it was ensured that that particular assets, the ancestral property, which they believed that it should go on forever and there should be legacy, it was put into a private trust, and everybody can enjoy that particular asset and they cannot sell out. So this is how it was, done in that particular case. So let's see what is the other thing. Right. So just when you just follow that case law, you will understand, when more than one children is, I mean, one child is involved in any matter, there is definitely going to be a conflict, because not everybody carries the same emotions and other things. And a lot of times, when the family gets bigger, there are going to be in-laws, spouses, and they are going to influence our decisions. They might want their share and they just want to have their own life. They want to get out. So these are the typical triggers how a conflict can come. So of course, it is challenging to address those things. Normally, I would say in a family, the mother will be the chief emotional officer. She will be the CEO of a family. She will make sure whenever a problem comes, you can relate to your real life scenario. Whenever a problem comes, she will make sure that things are in place. We are settled. The dispute is settled. But when the business is also involved, she definitely it is going to be built for a mother to handle that. So at that point of time, there is something that's need to be involved in this family constitution. So which is called family meetings or family advisory meetings. So what is important here is we may live in different houses, but there should be a frequent meeting discussing common things, resolving your conflict. What is the next interest? What is the next opportunity? Likewise, the meetings should be framed in such a way that each and every participant they get their opportunity, their voice. They should definitely put their idea out there. They should come with a very very clear ideas about what is going to be there, so that it should be structured. Another problem which might come is the generational gaps. A third generation might not be that much welcome by the first generation when it comes to business. So how we are going to resolve that? What is that a third generation can do? So each and everything can be addressed with the help of a proper family constitution. And whenever there is a conflict, we should plan a conflict resolution thing. So how it will be, whether it is a kind of a voting rights, or we need to go to an external advisory, or we need to involve some other professional. So these kind of things needs to be involved. So this way we will resolve the conflict between the family. So how to communicate effectively? As I said, hold regular family meetings, which is focused on succession. Uh, this is the kind of thing. This is at the very early stage. I would tell. So when we are planning for a proper business succession planning, it is very important that each of the concerned party in the family they spend quality time individually in the sense very privately, so that they share their vision, their ideas, their passion very straight from the heart. Because only when that is captured, a proper management divisional that can happen. Otherwise, if somebody is not very open with a family business advisor, then we might give them a wrong portfolio. Then that will again end in a chaos. So it is very important that these kind of things happen at the initial stage of planning the family business succession. We need to have our roles clarified, our expectations met, and our responsibilities to be taken care. So for that, we need to encourage open and judgment-free discussions. It can be either in through one-to-one, or it can be like a group discussion with the third generation ones and second generation ones, like that we can do. And whenever there is a conflict, we can involve a professional mediator. So, in real life scenarios, I know cases where mediation has helped a lot. Instead of going for a legal battle, mediation have helped a family business in a lot of scenarios. Either it is a division of assets, or getting involved in the management, or even when a sibling wants to do a separate vertical of the business. So in this kind of scenarios, whenever there is a dispute, definitely the first thing we should do is having mediation, having spending time with each and every sibling or each and every concerned party, sit and discuss what is the real problem, what does they want, because there might be misconceptions from by one person to the other, since a lot of stakeholders, employees, and other persons are also not involved. And when we are get very busy with the business, either of the family, they may not get this the old times, so to sit and discuss very heartfully. So it is important that whenever a conflict comes, whenever it escalates, we need to have a professional mediator, somebody or a family, if qualified or if eligible, any family well-wisher, they can be having, I mean, we can have them as a mediator. We can sit and openly discuss, see what is the best possible thing that is for the business, and we can do for it. So this is a very important thing. The discussion should be open. Then only a family can go on forever. I feel a little strange because this is outside, what a typical chartered accountant sees. This is I have not discussed any numbers or taxes or any procedures, but I hope everyone are with me here. Yes.
Actually, the topic you have taken is very important. It should be part of our regular activity also, regular advisory.
Yes. Yes.
Because while advising for any project or any company or be it conversion from company to LLP, so like that from taxation planning, but we never thought as a part of that advisory part should also include family succession planning also.
Yes. Yes. Ram, as you talked about this, I would like to go to this first, I mean, the first slide of mine. If you could see the last line, over 40% of the family business are expected to transfer ownership in the next 5 years, which means that if you see, lot of the business are that old that they want to transfer that their I mean the management, they want to transfer their responsibilities to the next generation. At least 40% are ready to transfer. So this is a very good area that we can see where we can advise our business, our clients very carefully and thoughtfully, so the business flourishes.
Every example you were discussing, like different persons have different interest and in different area also. So I
Yes.
was connecting with every words, and I was recalling my client name in back of my mind. So
Nice.
definitely we are going to discuss with them because that is also need of our, and the second generation has already taken up some of the responsibilities,
Yeah.
and
Good.
particularly they are like proprietorship concern, that is also a like a real challenge comes in.
Then we have a lot of, we should go to step three where legal and financial planning is proper. Whether a limited company is important or a private trust is important. We should first so see what are their assets, what is the business, how we can, who will be the next generation. So we can have that kind of discussion with them and see how we can help them.
So in practical scenario, how can we like suggest them to have a family succession plan from a perspective of chartered accountant? Like to the like to my limited knowledge, I think this is a thing I think lawyers should do for
Lawyers should.
compliance part. This is
I,
type of a thing will I have listened from my childhood, from my grandfather or like other family members. So everybody signed will in the name of their children. But in case of family business, how should we proceed? Like as a part of advisory.
this the first step is like breaking the ice. It is it might be difficult. The first step when I mean when a business is doing well and you want to go to that owner and you are talking about how you are going to put your next generation. Some might be okay, but a lot of scenarios they might not be comfortable. But we should start educating them this need. Maybe you can start with some real life case studies or scenarios that this kind of thing has happened, and my friend is saying this and we have advised this. You can open dialogues in that way so that it is easy for you to get in the next level of dialogues. So they will understand definitely when you talk about, we discussed about Loda and Kalyani brothers case and all. So when you discuss about those kind of things, or you write a mail on that, they will definitely, if informed, they will understand. Otherwise, we will, 1 or 2 meetings, we will slowly make the discussion, because this is an emotional kind of thing. So we should take it carefully. And it is not going to, it will be like, not like, a small 1 month consulting and all. This is going to take time. So that is what we are going to see in the next slide, the step 5. So implementing a transition roadmap. The first thing is we might have everything in place, like the every plan and thing in place, but execution is everything. We should understand that. So we need to create a proper timeline. First, we need to identify the right successor, introduce them to the board, put them in some role, management role. We should train them. And whenever taking crucial decisions, we need to involve them. And parallel, this is in the first 3 4 years. And from the fifth year, maybe we might see some, we might give some portion, maybe like production. Or the first fifth year, we can give them production and see how will they perform. This should be based on their interest. If they are interested in production, they should see the production. If they are interested in sales, they should see the sales. So here, what we need to understand is that throughout that period, that founder, the first generation, the owner, he should be there in the business. He should be parallelly training them. It should not be like once put in place, he exits. It should never be the case. They should parallelly guide them. So the founder remains the mentor and not the manager. After the fifth year, he will be like he will not be involved in any management related decisions, but he will be mentoring in the board meetings. So if things are not going that well, then there should be an emergency plan, as Tata Sons had. Mystery, it was not going well. They had different plans. They got Chandrasekhar in place. So we should be ready with any emergency plan. We should be ready with the next alternate leaders. And whatever happens, we should inform key stakeholders as well. So when I talk about this might not be applicable in all our scenarios. We should understand the crux of this family business section planning. And we can always see no business is the same. Each and everything has, even though of the same industry, they might have a different scenarios, different management, a different style of operating, different culture. So we need to understand, case to case basis.
In your first example, if one person is involved in like day-to-day business activities or in management role also, and one person is studying outside India,
Yes.
so how can we like proceed in that scenario?
See, in that scenario, what we need to do have is first, we need to talk with the founder. First, we should understand the vision of the business, how he wants to see his business, how he wants to leave a legacy to the business. Whether the first question we should ask him is whether he is really interested in having his first son in the business. Or if the first son is not that qualified, or if he is not that capable, then he might be interested in having any other second party on board, any professional on board, and to run the business, and the family can get to enjoy the dividends or the profits of the business. So the first thing is that we need to talk with the founder. And if he is interested to have both the sons on the board, then we need to talk with both the persons. We need to understand their perceptions. Then we will, in the first case study which I discussed, if you see, there was no formal business plan in place. Just because he left abroad, the person was involved in the business. It was carried in that way. But ideally, what should have happened is they should have an open dialogue with both the sons. If there is a scenario with you have a client like that, you can start talking with the founder. Then the next thing what you can do is you can have a meeting with the first son individually here, and the second son. But the thing is that once the outcome of the meeting with the founder should be like you should clearly send a message across the family that you are involved in this as a family business succession. This kind of exercise is happening. We should make all the stakeholders to this family involved, that in those whoever the person is involved, we should make clear that such thing is happening. Otherwise, what will happen? There will be communication gap, and the person who is abroad, he might feel like he might felt left. So that will again create chaos. So this is, as I told you, this is a long process, a lengthy one. We need to take step by step. And another thing which you said is normally lawyer does this work. Need not be. We can do it because we are involved. Any monthly GST discussions, we are involved. Any case notices, we are involved. Any next business strategies, we are involved. We are more involved than a lawyer. We know the numbers of the business, numbers of the family well. than a lawyer. Definitely that is there. And as far as numbers are concerned, we are very confidential with the client. So we may have a good discussion about this. And I know a lot of people who are chartered accountants are doing well in this particular field. And I would say chartered accountants can be the preferred persons to do this. Only thing is that we should be ready to spend some time for this. This may not be immediate, may not give an immediate fruit, but definitely this is going to be worth it, because we are more than we engaging for a business. We are going to protect a legacy, right? So I guess this fifth step is very clear. Let me move on to the next. I think we have discussed this case studies. Okay, Shaman is very clear with his delegation. He has brought his sons and daughter on board very cleverly. The business section plan is in place. The next Tata Group, the entire world knows how Tata Groups functions. And a bad example which we saw is Cafe Coffee Day, where there was no preparedness into the business. These are some common challenges we just discussed on this. So there will be emotional conflict among family members. So we have to address it very carefully, because when we there is a saying like when we are when we are out with our friends, it will be easy, but it won't be that we easy with our siblings. Uh, so likewise, when it comes to family, there will be a lot of emotions involved. So that is one thing. And a normal medium or small or medium or next level large size companies, they may family owned business, they may restrict themselves to professionalism, but I would say there is a change of trend. They are open to have professional people on board in the management, in the leadership positions. And when the roles and expectations, when there is ambiguity in there is going to be a challenge. So I would ask you to read this as a challenge. This is not a solution. The first thing is not a solution. Those are challenges. And the solutions, as we discussed, we can have a family constitution in place, we have independent advisors, and we can establish a communication channel. For example, when somebody has a problem with a particular family member in the management, he might politely escalate that in the family advisory board or in the family board. The family constitution itself can have a family board to discuss the issues in the family. So as we near the end of this session, I would like to give you these as some key takeaways. First thing is that we should start early. Then we should choose the right successor. As we discussed the three circles, we should clearly differentiate between the ownership, the family, and the management, and how we are going to resolve our conflicts through open communication. And the fifth thing is that the transition should be very gradual. If something is not going good, we should have an emergency plan, a plan B, and we should work on that plan. Then only we should, because this is not a ready-made. There is no ready-made solution for any business transition, but there are these 5 steps which can be properly planned and executed. If something is going wrong, we can always have advisory team on board. We can always have professional team for our help, and we can make it very successful. So, what is the next step? If you see your business, or if your employer's business, they don't have any proper business succeeding plan, definitely we can start talking about that. So the first thing is that then what are the next steps? We can start a discussion within your family. You can relate this with your family, whether you have a proper business section planning. If not, just see take a list of assets, how you want to grow it, have a 5-year transition roadmap, and see how well you are progressing in that. So my closing statement is, any business is a legacy for its owner. We should plan wisely, and it should last for generations. So the business fails not because they don't have a proper strategy. It may fail because it may not have a proper successor. Yes. I close my session here. Any questions I would like to have?
Now, for a substantiation business, what would be your suggestion? Because first generation business holders will be having it as a proprietorship concern. They won't be having it as a LLP or partnership or something. Since that's generation, what would be your suggestion? What
My suggestion would be see this family business section planning. That there is a size of the business that is required to have family business section planning. What they could do is they can, if it is a first generation, say they are just 40, they can involve a professional team on board for some time till the next generation is ready. And once the next generation is ready, as we rightly said, we can groom them, train them, and see how they can fit into the next, in the next leadership. For the time being, they can have a professional on board. And this is with respect to the management of the business. As far as the ownership is concerned, they can have a proper, depending upon the assets or the business, they can have a proper legal channel, say LLP, or a proper private trust in place so that the assets are protected and the management and ownership is differentiated.
Thanks. Thanks for your advice. Very informative.
So, yes, of course, you have my contact here. You can connect if you have any. So you can feel free to connect me at dr@nbbalaji.in or through my phone number. So I'll be always available to support you in this. Yes. So if there is no, did I miss any chat? Thank you, ma'am Muthalakshmi, for giving your feedback on this. Yes, Will is taking a long time to get in place. So yeah, right. So if there is no questions to discuss, can we call it a session? Or if you have any questions, please feel to send it me in a personal message or as a WhatsApp, or you can mail me at dr@nbbalaji.in.
So, Dinesh, so can we conclude?
I guess so. Thank you, Rishikesh, for your message.
Hello. On behalf of Shreyas Global, I extend my heartfelt gratitude to Mr. Dhinesh Rajaa for sharing his valuable insights and expertise with us today. Your deep understanding of topic succession planning and your ability to present complex concept in a clear and engaging manner have greatly enriched our knowledge. I would like to thank all the participants for their active involvement. Your questions and interactions made this event truly engaging and insightful. So thank you very much. So thank you once again, and we'll look forward to more such engaging sessions. Thank you, Dinesh. Thank you, everyone.
Thank you, everyone. Thank you so much.